All right, so let's get going and let's talk about the first 5-10 minutes of what this webinar or today's evening is all about. So, how to predict Nifty's next target, and once we manage to do this, it's going to take us not more than 5 minutes to figure out what's the next intermediate target for an index or any stock. And before we get going, a simple disclaimer to all of you. I'll suggest that you take few seconds and go through it. I'm just going to say that this is purely education in nature, and I'm not going to suggest any trade right now through this 1-hour webinar that we are conducting this evening. I'll just let this slide sit for 5 seconds more, right? All right. Now, Nifty is on a high. What do I mean by this? Nifty is on a high means Nifty has been hitting a life high quite recently. And if we see how it has been panning out over the last few years, I think it gained around 18 to 19% so far in the calendar 2017 as we stand towards the end of the month of June. Before that, 15-16 was actually pretty flat years. I think 15 was marginally down, 15 was marginally up by 4.5%, and 16 was marginally down. We'll look into the monthly charts and you'll see a clear understanding. The important, the million-dollar question which lies right now is, where are we heading? Technical analysts, many people in the market, traders, investors, they tend to have their own view and levels. If you and I, we want to create our own view and our own levels, how do we reach that level? That is what this webinar is all about. By the way, the right-hand side chart is that of Nifty that I've taken from a Fox Trader, Foxnet software that I'm using recently. Quite impressed with it. I'll show you a bit of it later in this evening. A lot of you may not know me. I don't blame you. Neither do I blame myself. But a lot of people don't know me because, I've not been that active in social media or any other media channels. But okay, I'll just take a few more minutes to just introduce myself. This is how I look nowadays. I did my economics graduate from the University of Calcutta, and I actually dropped out. Yes, I dropped out of my NSC while doing my MS in economics. This was back in 2004. And I still remember those days. Everyone has to go through their dark phase, a few days or weeks or month in their life, especially when we are young. And I used to listen, and I used to, every day evening I used to sit down, dark room, listen to a lot of Pink Floyd songs, and just used to think, what am I doing with my life? Anyways, as luck would have it, I got a job in Kotak Securities in the city of Calcutta. Was working for around 6 to 8 months. I realized I don't understand much about the markets. I have done my graduation in economics. I understand the theoretical aspect, but the pure market on-street experience I lacked. I went to Mumbai. I got into a 16-month program in finance, but I was always attracted towards charts. I was always attracted towards trading. As I was from the background of economics, debit credit did not actually lure me much, so I was not into fundamentals that much, and that's the reason why people did not respect me. Honestly, 2004, I remember very well. I was not respected that much amongst my classmates because I had made up my mind that I want to become a trader and look into the market through charts. My big breakthrough actually came when I joined the ICICI Securities institutional desk. Now, the institutional desk is a very different ball game, where I, for the first time in my career, was interacting, chatting with mutual fund managers, hedge funds in Singapore and Hong Kong, the smart money, the institutions. We every day look into the FII and the DII data. Now, this is 2007 when for the first time I'm actually talking to these people. What are their views? And I was quite surprised to see that they were asking me about my view also. So that's my biggest breakthrough. Later on, my last assignment was with BRICS Securities in Bombay. 2004 to 2013, I used to live in Bombay. I resigned as the AVP of Alternative Research Desk, so I had a team and I used to really enjoy doing some quality research out there. Came back to Calcutta, started a couple of companies, started Alphatic Advisors LLP, and then recently I have my website wherein I'm back into the advisory and training. I've tried to keep myself as little as possible over here. For those who are a little more interested, I'd strongly suggest that you can check my website, which is very simple, abhijitpaul.com. This is how the homepage will look like, right? A lot of stuff over here. We can talk about this later. Going back to our slides. Well, this entire stint of, broking in Bombay, institutional research has actually exposed me meeting various people. And I'm quite blessed, quite honored that I have actually worked with quite a few eminent names in the industry. On the left, I have Dr. C.K. Narayan. It was a pleasure working with him in my ICICI Securities days, and later on when he started his own firm, Growth Avenues. On the bottom, I am there right in the middle talking to a bunch of treasury dealers of all banks across India. This is in NIBM Pune. Well, Pune is one of my favorite cities. On the right, I managed to meet DJ of the Traders Carnival group. Very nice guy. This was early this year in Bombay as well, when I was there in Finbridge, as you can see, giving a lecture on what are the trend and volatility one should look into. So this has helped me. My journey has been so far awesome. Learned a lot from people, learned a lot from my trainings as well. And as I go ahead forward, I hope that, we learn a lot from each other for sure. So if I ask you a question, let's say that the 5-year-old you, okay, the 5-year-old you, okay, now quickly, I see a couple of people like Ravindra is saying no audio. Can you quickly give me an audio test? I'm going to write out audio test, and if it's okay, just write audio okay so that others who can't hear me knows that yes. All right, thank you. Audio okay, perfect. Thanks. Thank you. Thank you. So question, and I would want this webinar to be as interactive as possible. I know one thing for sure, guys, that both of us have one thing in common. We are all passionate about the markets. So let me ask you a question. The 5-year-old you, the you who was at the age of 5, and the you now who's listening to me right now through internet in your living room or on your office or wherever you are, who's the happier person today right now? Is it the 5-year-old then, or is the or is it the you in the now? So Neil says now is more happier. Harsh also agrees. Devin also says, Sandeep, although he says Sandeep and Narayan says it's the 5-year-old. Okay. Manoj also says 5-year, and Santosh 5-year-old. Yeah. Sandeep, yeah. So, I've asked these questions, especially when I take these sessions on trading psychology, the mentality that goes into while we trade in the market. And I came out with, I realized, not I actually came out, I realized few aspects about the market. I realized that when I've asked this question to I must have asked this question to over 1,000 people. And most of the time, the answer is a little biased towards the 5-year-old. I would say 70 to 80% of the answers are the 5-year-old. The reason I figured out is when I look into when I look at my daughter and my son, I realize that they are pretty chilled out, man. Like, why are they so chilled out? And they are full of energy for sure. So I thought a little bit, and I realized, and I came to a conclusion that well, they don't make any decisions, right? They don't make any decisions at all. My son does not decide what to wear tomorrow morning to school. He doesn't decide what to eat tonight for dinner as well. So all the decision making is out of their brains. So they are just having the time of their life. Now look at us. We got to make a lot of decisions, right? We need to decide from as basic as what to wear to work tomorrow. What to eat probably is decided by our wives or probably our better halves. But if you realize, consciously and subconsciously, we are taking a lot of decisions. And while taking these decisions, there is a mild fear factor, no matter how big the decision or how small the decision is. There is a fear factor. Now, think of us, you and me, sitting and trading in the market. We already have a heap of excuse me. We also already have a heap of decisions to make, and then when we are seated in the market is throwing at us a lot of information. It can be fundamental information, it can be price-based technical information, and not only we have to actually understand the information, we have to break it down, we have to dissect it, and then do a trade. And then we anticipate, we expect that each and every trade is going to go right and we are going to make millions. As I was, thinking about this, as I got aware of what trading was all about, I realized it is all about decision making. And decision making does not come easy for humans. Okay, it is not a very easy call. Making a choice, taking a call is not always an easy thing. So that helped me a lot in my trades, in my decision making, both in the markets and off the markets also. And that is something which I have digged in quite deep with a lot of people that I've trained in Calcutta and outside Calcutta as well. So I'll come back to this point. This is quite important. Please remember that we have a brain which is eating up around, I think, more than 20-25% of the energy every day. And then all of us are in the market. So we are doing a pretty good job if we can actually consistently trade and make returns out of the market. Right. Now, can you tell me the difference, let's say, when I was, preparing this slide, I had this thing in mind that what do we seek? Do we seek clarity or do we seek a solution? So I was just thinking that the way I approach the markets or life, I am more into clarity, not solution. The solution that I think right now is actually appropriate for the temporary problem may not be the right answer. What I rather will seek is clarity. What we will do now when we go to the charts and try to draw some extensions, projections to figure out the Nifty target, what are we trying to do? What we are trying to do is get some clarity. If the Nifty extends this bull market further on the upside, then what are the levels where I have some clear thoughts is going to test, right? If I'm going to do a trade tomorrow on the Bank Nifty, I need to be very clear what should be my entry point, what should be my stop loss if I go wrong, where should I exit if I make a profit. So this clarity is very important that we should all seek, be it in this webinar or be it any other trainings that you attend. Make sure that when you're seated in front of the market and if you're doing a trade, please trade with clarity. If you go wrong, no big deal. We all go wrong, right? The best of the traders also goes wrong. So no big deal that going wrong in the market. But trading without clarity probably is not the best of things. So we're not going to find out any solution. We're not going to find out any become rich quickly kind of a thing. But we are looking here is that can we track, analyze, trade the markets with a lot of clarity. Okay. Now we go to the Nifty chart. Now let's talk some serious projections, right? I'll be using for this webinar, I'll be using the online free version of tradingview.com. Those who are aware of it, it's a pretty good web-based platform, probably amongst the best right now. Very clean interface, a lot of tools, pretty good. I'll be using this interface to explain to you the concepts that I use to figure out the intermediate targets either on the upside or on the downside. For today's webinar, because we are in such a nice bull market, our targets generally, but obvious, will come on the upside. Now, The tool that I'm going to use is the Fibonacci projection, the Fibonacci extension. Now, if you are not aware of Fibonacci, I'll give you a little brief. Those who are completely new to it, this is what I suggest. Come to my website, come down towards these 5 links, which are of the social media channels. Please go to the YouTube, my YouTube channel. Right, that's me. Now, I have few videos which are, most of them are educational in nature. Over here, there is a video which I made a couple of years back. When you come here at technical analysis teachings, okay, the teachings of the subject technical analysis. And in this playlist, okay, there is a video over here, the Fibonacci series and financial markets. I will break down the whole thing in brief and show you what it is. Those who are new to it, I strongly suggest listen to this video, go through it when you have time. What I'm going to do now is show you a bit of it, okay? This is the Fibonacci number series. What you have over here is the Fibonacci number series, right? It's an old number series which has a little bit of magic to it, which actually works really well. And out of these number series, let me full screen it. Yeah. And out of this number series, few aspects pop up. Few ratios are derived. Okay. Now in this video, what I've done is I have derived these ratios and I've shown you how they are derived mathematically using a calculator. I've shown you, now as you can see on the left hand side, I have derived 0.618, 0.382, 0.236 and then 0.786, which works wonderfully. It's a square root of 0.618. How these numbers are derived, then that's just not out of thin air. I've shown them in this video with the help of a calculator. Simple ratios. Then I go ahead a little bit further and derive another set of numbers. Yeah. And derive another set of numbers, which you can see is on the right hand side. 1.618, 2.618, 4.236, and then there's 1.272. Now pay a little attention over here and see that on the left hand side ratios, which are the retracement levels, are all less than 1. They're 0.618, 0.382 and so on. If you see those numbers on the right hand side, which is under the green extension levels, these are the expansion, and they are all greater than 1. There's 1.618, the 2.618 and etc. Now for today's webinar, we will focus on the expansion side because we want to find out targets, and these targets can be on the upside as well as the downside. We'll focus on the targets on the upside, and for that, these are the 4 ratios which I request you to use. What are these ratios? 1.272, or the way to say it is 127.2%. I'll explain them to you step by step. 161.8, 261.8 and 423.6. Well, let me bring my notepad. So we are going to use Fibonacci over here. Now Fibonacci financial tools are of various types, arcs and spheres and lot of things. Retracements also is a very important tool. These things I cover in my training program. I'll talk about them a little bit later. The QMT program that is coming up next weekend, I'll be probably walking you about that a little bit later. But for this webinar, we will use Fibonacci, and we will use 2 main things. That is the Fibonacci projection, yeah, and the Fibonacci extension. Now various softwares have various names, and we tend to get a lot confused, and that is how I was when I actually digged quite deep in Fibonacci back in 2009-10. So the way I remember them is not by the name of projection or extension. What I do is a 2-point, let's say 2-point projection or a 3-point projection, whatever you call it. For extension, for one way, we will need 3 points to figure out the target, and the other way we'll need 2 points to figure out the target. I'll show you how to draw them both. The ratios that we are going to use are derived from the Fibonacci number series, and we came to a final conclusion that these are the numbers 127.2, 161.8, 261.8 and 423.6. These are the 4 main Fibonacci expansions ratios for percentages that we are going to use while calculating targets, be it the 2-point or be it the 3-point. These are the 4 levels, 4 percentages we are going to use. Now let me tell you the concept. Well, let's start with the 2-point. Let's say you have an upside movement of the market from A to B, right? And after that, prices come down a little bit, and then it starts to pick up. Once B is broken, once the prices goes above B, the possibility of upsides open up. As long as it is below B, we don't know what is the higher target. Once B is broken, a higher high is made. Now we can get a target on the upside. Now there is a possibility of a target on the upside. What can be these levels? What can be these levels of possible targets? Let's come to the 2-point. The 2-point is the one that I like a lot compared to the 3-point. Works better for me. The 2-point calculation concept is very simple. The 2-point says that if the movement from A to B, what has been the movement from A to B? What is the distance? And if this distance is 1, then the targets on the upsides will be 1.272, 1.618, 2.618, and then the fourth one 4.236, right? So if this entire move is 1, then I get the targets on the upside accordingly. This is the 2-point, and this is the one which I prefer while figuring out targets for the stocks or any asset classes. Before we go to the 3-point way to calculate targets, let's practically see how do we do it for the 2-way for Nifty charts. Okay, thanks Ankit for that. Yes, guys, few of them are having some audio problem, can be bandwidth issues. I have mentioned in my email that please keep your bandwidth free as much as possible. Please log out and log in again, it works. Okay, now we have understood the 2-point. Let's come over here and I'll take you to, let's say, the monthly or the weekly charts of Nifty. Okay, let's say we come to the monthly charts of Nifty. We're going to figure out the long-term charts. Okay, now as of now, I'm going to also tell you a little later how to figure out which lows and highs to take. But for the time being, I'll just draw and show you. Later, I'll refine it. So I have the Nifty monthly chart in front of me. I come over here and I find here Fib retracement. There is also a trend-based Fib extension. These are the 2 tools that we'll be using. First is the Fib retracement. I select it, I come to a highest point, I drag it down to the lowest point and I drop it like this. In trading view, what happens when you double click it, a box opens up with a possibility to draw as many percentages as possible. Now mind you, we are drawing expansions, so we will focus on the ones which is above 1. So I have ticked 1.272, I have ticked 1.618, 2.618 and 4.26. Trust me, there is no need to have a lot of Fibonacci levels, doesn't work. So I OK it, and here I have targets. As you can notice, these are the targets which opened up for the index when the index broke over here. And I'm talking about the index breaking out in the zone of around 2013, early 2014. This was the big breakout, right? So the first target of 1.272 was around 7,500. So that the market did not respect much. So what we can do is we can take it out. We can deactivate it. That's gone. Then we notice that the 161.8, 1.618, that was close to that 8850, 8900. That's exactly where the zone was around 2015 March. And after that, we got a decent correction. We got a bounce back, which again figured out that it couldn't take out that 8950. So 161.8, this target, which we got back in 2013 October, actually was holding well in 2015 as well as 2016. And now we are in a stage where this important 161 is being nicely taken out by the market thanks to the last 6-month move. Now I'm sure you're eager to see what is the next 2.618, right? You want to see what is the level on the 2.618 on the upside? Yes? All right, Neil. So the one on the 2.618 that opens up, guys, for the Nifty is close to 13K. 12,960 is the level that opens up. So now from a long term, mind you, we're drawing this on the monthly charts. It's not something that's going to come next month or next week. Okay? You have to realize. Yeah. Please request, keep yourself in the mute mode. All right. So you have to realize something, that from a long-term point of view, 13K is the kind of target that we're looking at. Now, I clicked Fibonacci retracement. I had my percentages in place. I took a high and a low and I just dropped it and some levels popped up. It doesn't mean that it's going to work all the time, right? There are certain rules that I will now tell you. How do you choose the highs and the lows? Also, one more thing is my experience with drawing Fibonacci tools has been far more appropriate, far more perfect, correct, when I drew them and analyzed them on the weekly, monthly charts. The shorter time frame I went and I drew them, they kind of became, because in the shorter time frame, try and realize, understand that prices are a lot more volatile. So they don't tend to work that well when we come to shorter time frames. Now let me tell you a rule. How do you choose the highs and the lows? By the way, someone was asking me which platform I'm using over here. This is the free online tradingview.com. Okay. I'll show you the homepage. Amit is right. Investing looks like, well, Amit, investing is essentially has integrated trading view. The platform is tradingview.com. Investing has integrated their API. So investing does not have a separate charting tool. It's this one only. So this is tradingview.com. I've purposely chosen a free online so that everyone can relate to, everyone can go back and try out themselves, right? Rather than using any software which probably you may not be using. So this is tradingview.com. Now, before I go to the 3 point, I'm going to lay down few rules. Let's say you open a chart and you want to figure out how far can it go on the upside. So you go to Fib retracement and you select it. Now the question comes is I have to go to a high, I have to drag it down to a low. Now which high do I take and which low do I take, right? So for this we will take the help of Mr. Ralph Nelson Elliott, and he actually gave us few basic rules, and trust me, when we use this it works well. You need not, see, I am not an expert in Elliott wave theory. Trust me, I find it a little more complex. I'm a kind of simple guy and stick to simple things. But this simple rule of Elliott's 5 waves is what I keep in mind when I'm drawing a fib. So what are the rules? Well, according to the Elliott wave principle, an impulse wave will have a 5-legged move, right? Where this is wave 1, 2, 3, 4 and 5. Now in this 5-legged move impulse, either on the upside or on the downside, to count them as 1, 2, 3, 4, 5, there are few rules. What are these rules? Please pay attention. Wave number 2 cannot go down below wave number 1. It cannot go down below wave number 1. So if you see a chart where something like this is shaping up, you actually ideally cannot take these two levels and plot it on the upside, right? You have to wait for this wave to finish, turn around, go up, close above this or break above the high, and now you have a possible. Why you should wait? Because you never know whether this move can come down and go below this. So you always wait. So first rule, wave 2 cannot go below wave 1, number 1. Wave 3, this guy is generally the longest. Most of the time it's the longest. It has strong competition with this one, the 5th wave also, right? So again, if you have a chart which it looks like, let's say it looks like this, okay? You will be counting it wrong if you say this is 1, this is 2, this is 3 and this is 4 and now I'm going for 5. This will be a wrong reading. Why I say so? Because I see that 3 in length is less than that of 1. 1 is never the longest. Okay, it's the 3 and the 5 which is the longest. So that's the second rule, that between 3 and 5, these are the guys which are the longest. So we'll keep that in mind. And the third rule, and this is really important, is number 4 should not go into the body of number 1. What's the body of number 1? This is the end point of number 1. This is the starting point of 1. So this is essentially the body of number 1, right? So when 4 is happening, when 4 is coming down, prices are coming down, it should not go as down as getting inside the body of the first wave. If this happens, the counts are wrong. So these 3 simple rules you have to keep in mind. 1 should not be the longest, and 1, trust me, is never the longest. It's the 3 and the 5 which are the longest, and amongst the 3, within the 3 and 5, 3 actually has a edge, better possibility. The one I closely keep a watch is 4 should not get into the body of 1. Now, keeping this in mind, can we go to the Nifty chart now? If I come to the Nifty chart, and this was the end of the 2008-9 correction, and if I consider as 1 and this as 2 and this is 3, perfect, because 3 is larger than 1, that's all right. And if this is 4, trust me, this guy should not enter the body of 1. So if this is 1, it should not come below this. So I can count this as 4, and probably what we have is probably 5. Keeping this in mind, now I can take this as a high, this as a low, and draw on the upside. This I am projecting, I am drawing a target using 1. Okay, I think over here I have, there is a nice Elliott count tool. Yeah, this one. Okay, now especially for those who are into Elliott waves, trust me, I'm not saying that this is wave 1 or wave 2 and all. What I'm saying is try and understand the structure of a price. I am not an Elliott master, and I don't know whether these counts are right or wrong. What I know is the price structure is very clean. And if the price structure is clean, then this is my 1. And what I have done, I have extended the 1 on the upside. Done. Okay. Now I can extend the 3 on the upside also. So if this is my wave 3 I can come over here, drag it down over here, leave it. This will give me targets on the upside if wave 3 is extended. So I get many levels on the upside. So essentially we are looking at if wave 3 1.618, trust me guys, is a very strong resistance, is a very strong Fibonacci number. So 11,850 and 13K are the numbers that we are going to look at. Any questions? Does it also work on short-term charts, Dinesh? As I said some time back, that my experience has taught me that they tend to work better in the higher time frames I go. Much better. The issue that I face with short-term charts is the volatility, the swings in price, right? So daily charts still okay, but trust me, don't go into intraday charts and drop Fibonacci. It's not worth it. Karthik, we can actually do projections for any asset class, for Dow Jones, for gold, for silver, anything. Yes, Devin, that's true. So the things that you have to keep in mind, I told you, is first the structure. And in this structure, let me quickly write down the rules so that it's a quick refresher. So the structure is that 2 should not go below wave 1. Okay. 3 and 5 are generally the longest, right? Are generally the longest. So keep that in mind. If you have a case where 1 seems to be really long compared to 3, your realization is wrong. And then this one, 4 should not enter the body of the length or the body of 1. Keep these 3 simple rules in mind. Find out a nice structure, and now you know which highs to take and which lows to take. Let's try this out. Let's come to Nifty chart. Now let's drill down from the monthly and let's go to the daily. Okay, and what I'm going to do is I'm going to take these out. And when you come to daily, this is the chart that you see. This is the daily chart that we see. And if I have to find some waves, I figure out this was the first move, then a short-term correction. Then it actually took up really well, and there are multiple corrections and moves, right? I can easily consider this as to be my 1, because 2 has not gone below 1. 3 can be all the way here or here. Whichever is the 4 has definitely not gone below 1. So my 1 is clean, this one. So I do retracements and I drop it like this. I'll request everyone to stay in a mute mode, please. Thank you. Okay. TradingView has a habit to give you pop-ups. Okay. So this is where the targets come up, right, after this move. So the first target was 87.92. The next target was 93.42. Okay, I need to get out of this. This move has to go. 1 minute. This retracement we got from the higher time frame, so I need to delete this. Okay, quickly I go to the monthly chart. Quickly okay, let me get rid of all. Okay, all the Fibonacci retracements are gone. Go to the daily chart again. Okay, go to Fib retracement. Come over here, drop it down to the low over here, click it again and leave it. So what do I get? I get that the next zone for this one is around the 10,260, 250 level. How did it pan out over here? Well, it gave some bit of very short-term bit of supply 161, 261 tends to work well, trust me. So over here a little bit of very, very short-term correction. Over here the market went into a complete sideways. This was, I think, post the UPA government, and this is a very beautiful thing that we should keep in mind. Note over here that when we draw these levels on the upside, we create in our mind expectations, anticipations. What? That the market will go there. The market actually goes there. And what will you expect? That these are targets, so they might face resistance. I can see that at 261.8, I did see some resistance. And trust me, if this resistance works, then once it is taken out, when resistance is broken, it becomes very good support. Keep this in mind. When we draw a Fibonacci level, we anticipate that it's going to get faced. Okay, let me draw and explain it to you. Let's say you draw some Fibonacci levels and you have figured out some future targets. What I'm trying to explain to you is these are all anticipated targets. It can be very well possible that none of these levels actually come. To keep in mind the fact that if the market goes and comes to your level, you will anticipate that some degree of halt, price halt can happen, may happen. If it happens, then this anticipated level has actually given me resistance. And if that happens, and if that level is broken on the upside, it will act as a very good support. And that's exactly what we see over here in the Nifty chart at the close to that 93.50, 93.60 zone. Once we had the breakout, the quick sell-off, we found exactly support there and it bounces back. I would not recommend you to go below the daily chart to calculate Fibonacci. Do not do that. If you're looking into lower time frames, means you're doing intraday or swing trades. In that case, the kind of strategies that I share, that I trade myself, I focus more on risk management, on booking profits, on trailing stop losses, not figuring out targets using Fibonacci. Okay. Now, any questions before I go to the 3-point now? 3-point is relatively easier, but this is the one, the first one which I showed you here is the one which I use and it actually works well. Yes, Rutramurti, I will take up a stock. I will definitely take up. Thank you, Devin. Can we predict time? Tilak is asking, can we predict time? Well, time is a self-created thing. We know after 15 minutes it's going to be 8 o'clock and after 1 hour, 15 minutes it's going to be 9 o'clock. But let the pun be on the side. What you're asking, I understand, is can we predict by what time will 13,000 will be met? Yes, there are tools to do that. I have tried it out myself with a fair bit of success and failure. And then I realized something, that there are two sides to it. The first realization that I had is I invest, I trade, I advise. And when I'm giving you, if any one of you is one of my clients, subscribe to any of my products, what you will get from my research desk is levels, that is price. You will not get a research from my research desk telling you tomorrow 1:55 p.m. buy Nifty and tomorrow 3:15 p.m. sell that Nifty. Doesn't work that way, at least from my side. So I work more on levels. When we put in money and buy, we don't buy time, we are buying the levels. So my entire effort goes now more into figuring out the levels rather than time. Can it be done? Yes. Is there any accuracy in it? There is a slight degree of accuracy if done consistently well. Does it backfire? Yes, it backfires. Then if you ask me why I don't do it, well, the main reason why I don't do it is, let's say we use a set of tools and right now we figured out that the long-term target for Nifty comes out around 13,000. Then we will have another set of tools which will tell us that this long-term target of 13,000 will be met in, let's say, March 2019. Okay, we come to a conclusion that March 2013 and let's say between Feb and March 2019, 13,000 of Nifty will be met. 13,000 is calculated through the price tool, and this date is calculated through a time tool. Is it possible? Very much possible. Why will I not do this? The moment I do this, trust me guys, the moment I do this, and this is where the brain starts to play around with you, my subconscious mind will anticipate and expect two levels of anticipation. One is a price based and the other one is a time based. So I am selling myself subconsciously कि 13,000 तो आएगा और Feb March 2090 तक आ जाएगा. The moment I do this kind of research, I'll write up a report, I'll tell it to a very many friends, I'll put it on social media. The more I say it, the more I believe it. And trust me, the more I believe it and the market does the opposite of it, the more difficult I will face to actually accept that I have gone wrong. So that's why I do not do the time prediction. It's possible. I've tried it with the Fibonacci tools. Works okay, but it's not worth the effort. Abhiram, don't worry. I'll share this recording with everyone on YouTube free. Not an issue. Okay. Now let's go to the 3-point. If the 2-point is clear, which is the important one I wanted to show you all, let's come to the 3-point. The 3-point is, first let me show you the concept. The 3-point is where, guys, we need, as the point is, 3 points. So I need A to B, B to C. So I need a point of A, I need a point of B, and now I need a point of C. So this time what the calculation does, it will consider what was the gain from A to B and then what was the loss from B to C. So B minus A will give you a certain distance of gain and B minus C will give you a certain distance of loss. And when I subtract the gain and loss, I land up getting certain distance, certain number of points. The next thing that we do is very simple, is we multiply these points with 1.272, 1.618, 2.618, 4.236, and once this level is reached, we figure out the targets. Let's see the practical side. Over here in tradingview.com, this indicator, this tool is called trend-based fib extension. I come over here, come to this lowest point, go to this highest point, come back to this lowest point, and bang. Wow. The 1.272 comes at 9682 and the current highs of the Nifty is 9709. Close, very close. Right? So according to the 3-point rule, it is at resistance 1, 2, 3, 4, 5, 6 consecutive positive months. The last time we saw 6 consecutive positive months was back in 2016, this move, right? So according to the 3-point, this is the immediate target that we should look at. Noted. The next level, 11,000. That is 1.61. Oh, wait, one sec. I have to double click this. I have to check. Okay, 2 is somehow activated, so I deactivate that. Yes. 15 grand is around 2.618. Pay the maximum importance to 1.61 and 2.61. These are the two most important ones. This is the 3-point rule, right? Now using this 3-point rule, let's say we zoom in a little bit here. Okay, we zoom in a little bit. Now pay a little more care over here. If this is 1, this can be 2. Yes, because it did not go below 1. Can this be 3? Possible, because it's longer than 1. Can this be 4? No, this cannot be 4. Why? Because it's gone inside the body of 1. So this is not 1, this is not 2, this is not 3, this is not 4. And definitely this is not 5. So if this is not 1, then if If this is 1, this is 2, then this is where not 3 ends. Probably this whole thing is 3 and this thing is 4. You got my point, how you have to draw them? So let's say I come over here and I say trend based Fibonacci extension. So if I draw this, it will give you very short term levels, and there we go. Let me take out the earlier one that I drew out. Okay. I just wanted to calculate if this ABC extend on the upside, what are the probabilistic targets? 1.272 was around 6100. That's exactly from where we have a sell-off. It did not respect the 1.618. It did not respect the 2.618. It went really close to that 4.236. But it actually, the 1.272 over here worked really well. This is how you're going to figure out how to choose this ABCs and draw them. The reason why I like the 2 point is it is simpler. For me, it has worked better, right? I'll be taking an example of a stock, and let's say I take ICICI Bank. ICICI Bank NSE, all right. Okay. Now, if this is 1, this has gone into a flattish kind of a complex correction. So 2, 3, definitely not 4 because it's gone below inside 1. So I will not consider this as a swing move because this is definitely not 1. Can I come down to a slightly lower time frame, let's say weekly? Okay, this is nice. So this move, can I extend it? So let's say I come to the low point over here, go to the high point over here and drop it down to this third point. And my 3 probably is in the making. I get targets of around close to 304. Mind you, this is the 3 point. I'll do one thing quickly. I'll change the 3 point color to gray. All the 3 point colors to gray. There's a reason why I'm doing this. So all this dark gray zone is the 3 point. I don't want the zone. I don't want the zone. I want the trend line. I don't want the background. Beautiful. I got only lines. Now I want to draw my 2 point fib retracement. Come to the high, take it down to the low. There you go. I double click it. 1.272. Now this time I'm gonna make it, let's say, red. Red, red, red. I don't want any background. Okay. Now, what I get over here is I see 1.272 has been taken out with it. This level, 1.618 has been taken out. Remove that. 1.272, this is also gone. Remove it. This is what we are left with ICICI Bank. We have a target of around 304, 305 and then around 345 on the upside. What I'll suggest, please keep yourself in the mute mode, please. Thank you. What I'll suggest you to do is you have to draw such multiple cases and figure out where are the clusters. There can be cases where one Fibonacci number is sitting on top of the other, and in that case those levels are really, really strong. Right? This is Samay, this is not perfect. This is not even close to Elliott wave principle. I use the basic structure of the Elliott wave to figure out which is the 1 and which is the 3, because I am going to extend the 1 and I'm going to extend the 3, and the 1 is going to give me a peak of the 3, the 3 is going to give me a probable peak of the 5. I would like to see where those clusters are, right? So this is not mainly Elliott wave, but I use the structure to figure out the 1s and 2s and the 5s, right? So this is tradingview.com. I'm going to show you quickly a beautiful tool that I'm using nowadays thanks to reliable software. Is there anyone in the room who uses Falcon software? Falcon software, the F7. I'm sure because it's very widely used in in India, and they have come up with a new software some time back. It's called the FoxNet and the Fox Trader. So I was quite impressed with the way they have designed this program. It's on .NET, and this is how my screen looked like when I was trading, when I was advising my clients today the whole day. Right, I had a couple of calls going. As you can see over here on the left hand side, this is a very beautiful thing called volume profile. I had a call today on Tata Communication, which we went long on a intraday basis, and I was keeping a very close track on watch on which are the price levels which had the maximum volumes, the bid hit volumes as well as the ask. So the left hand side are where the selling volume was more compared to the buying volumes. This is something that gives me a good understanding. Apart from that, there are various things about this software which I am actually liking a lot. And with that in mind, I have actually decided to take up a program which I'll be taking up from this weekend. I call it the QMT. I call it the Qualified Market Trader. Right? This is another screen which after you can backtest and strategize everything. So you remember we were talking about the clarity part. So we would like to get into a stage where there's full clarity of what we are going to do tomorrow, which are the stocks we are going to go long, short, etc. A good understanding of the market, a good set of strategies, a decent software where we can scan and backtest, and I think we are good. With that in mind, I developed this 16-hour online program, the QMT. Those who have already registered, I'm sure there are few, which I saw few names. Is there anyone who has already registered for QMT? Can drop me a yes. So guys, this is what we are planning to kickstart from. Yes, Ankit, welcome. I know you were probably one of the first, very excited about the markets. So this is what we are going to kickstart from Saturday. We're going to have a weekend program, Saturday, Sunday, back to back, 8 classes, 2 hours each, all classes recorded. And I'm going to show you a few strategies that we are going to backtest. We're going to go through few of these screeners, right? And this is one program which is close to my heart that I have. Okay, great, Naveen. You've registered for AST, and AST is where I'm a faculty. So this is one which is hardcore. This is something which has a lot of aspect about practical aspects, and this is where we will be creating a lot more strategies, scanning them with the help of this software. It's 8 o'clock. That's my laptop saying that it's 8 o'clock. Okay, any questions, any doubt, guys? You can ask me about how we use the Fibonacci to figure out what are the probable targets. Neil, stick to 3. Stick to 2. Neil is asking which one is better, the 2-point or the 3-point. I'll suggest stick to the 2-point. Gives you better levels. By my experience, Neil, purely by my experience. What about P ratio, which is the highest point now? Well, the Rashmi Prava P ratio. You have to check on the website. You will figure out what's the Nifty P right now. It's slightly on the higher band for sure. But that's not what we cannot calculate the Nifty P using Fibonacci, right? What should be the stop loss? Some stop losses are essentially part of trading strategies. If there's anyone who's been trained by me, he or she will know that post my trainings, we reach a stage where we have clarity. If today is Wednesday, and today is the 21st of June, the summer solstice, then before tomorrow 9:15 market opens, when we run our strategies, we know which stocks we should be focusing on, and we will only focus on those stocks. We will not be focusing on any other stocks apart from our scan. So if you have been trained by me before, you know that what we seek in the market is not profit. What we seek in the market is an approach, a clear clarity approach. With that in mind, the profits will come. With that, small losses also come, but end of that, I know very clearly what I'm going to do tomorrow. right? For any other, stop loss, targets related, you can drop me an email, or let's say I'll give you my email ID over here. It's alpha.paul@gmail.com. Yeah. You can drop me an email, just mention in the subject that you attended my webinar on the Nifty, right? Ask me questions, I'll give you that. Also, if you have any questions related to the QMT program that I'm coming up, feel free to call me. That's my handheld number. I've got only one number. I've got my WhatsApp is over here, my Telegram is over here, and that's my email ID. You can drop me WhatsApps, you can drop me Telegrams. Well, QMT, NV, sorry, I can only see NV. I don't know what your full name is. The QMT program is for 20,000, inclusive taxes, and this is the schedule. We are kicking off this Saturday, 4 to 6. Classes are on the weekends, Saturday and Sundays. 4 to 6 on Saturdays and 10 to 12 on Sundays. Entire 8 classes is online. All the 8 classes are recorded. Everything is shared with you through a private YouTube channel. You will be a part of a private Facebook group wherein we keep on sharing very unique techniques and secrets about the markets, and it's only restricted to those who attend the QMT program. Falcon is a free software. No envy, Falcon is not a free software. Falcon, Fox, a lot of these softwares have various versions. Few of them are slightly cheaper, few of them are expensive. The good thing with the QMT program is we will get the Fox or the Falcon. You've got to make up our mind. Both are equally good. Probably we'll go with Fox for 1 full month. 1 full month from day 1 to day 8, we will be using the software. I will not be giving you theoretical way of what we did right now, but the objective would be to give you assignments, show you how to do it, and make you do it, right? Neil, I'll be coming to Mumbai next month, but that will be on a training, but classroom training probably sometime later. I'll definitely let you know, but trust me, the last couple of years have opened my way in which I train. Online is far more better compared to classroom. Trust me. Narayan is asking about Spider Iris. I use it. I've been using it for ages. Pretty good, but it also has its own restrictions. I can only say, Narayan, the reason why I'm looking into this software, and this is the one that we will be using for 1 full month, everyone at those who join the QMT program, is because it has few things which are very unique. And I can just show you one of them, is that when we do our candlestick classes, we'll be going through some patterns. And in this software, there's a market watch. And this is all the stocks which are in FNO. I can quickly just click and figure out which are the stocks which has made a doji, which are the stocks which has made a harami bottom, which are the stocks which have made a dark cloud cover. Now this is beautiful. This actually gets real time. This also actually will help me when I take up the QMT program, especially the candlestick classes. And once you have the software, the real-time market, you actually can relate to it. So I think it's a little better off than the Spider. Yes, Amit, they have market profile, they have volume profile, they have time profile. The way they have plotted it over here is a little different, but yes, we will be covering all these aspects also. QMT intraday strategies, yes, there will be a mix of all strategies. There will be intraday strategies, there will be swing strategies, there will be positional strategies, and there will be long-term buy and hold strategies using charts. Post QMT, you need not buy F7, you need not buy Fox, you need not buy any of the softwares that I show you or give you for free. The reason I give you a software is to practice. Once you've practiced and you've understood the theory, you can implement it in Metastock, AmiBroker, or any other software, right? The objective is not to sell software. The objective is to understand the concept, focus on the clarity, and practice it on the software. Because we cannot practice in n different softwares. If 20 of you say that I'm going to practice in, it becomes really difficult. That's why we have chosen on a software which all of us will have. What you like, day trading or positional trade? Well, you know, it depends on the time. It depends on the situation. There was a time in 2012, 13 and a half, around 2.5 years when I used to only trade the 60-minute charts of the Nifty. That's it. Nothing else. No stocks. Not even Bank Nifty. And I used to be glued to the screen from 9:15 to 3:30, and post 3:30 I used to go out for a swim and gym and etc. Right? Now in a stage where I'm not able to, you know, completely glue in front of the screen. But the right answer is, do not choose the strategy. Okay? Do not choose that I want to do intraday trades. I want to do position trades. Do not do that. Try and figure out that who are you, how much time and what can you give to the market? How much time can you research in the market? How much time can you sit in the live market? If you have a full-time job, you will not be able to. So first write down these points, figure out who you are, what do you want from the market, and then in between bridge it with the help of a strategy. You come to a person like me or someone else who will help you understand the strategies, make you understand all different types of strategies, trial and error, all of them, paper trade, all of them, figure out this works for me, and then you specialize on that. Right? I prefer intraday trades because the fact that there is no overnight trades, and I prefer long-term trades based on charts, and they will have holding period of at least a year to 3 years. Sandeep, you will get a recording of this webinar. I'm going to put it on YouTube. Trust me, we had a maximum of more than 115 people in this webinar today. Thank you. But I know that at the back there were 200s more who couldn't join in. So I'm going to put it on YouTube very soon. You will get an email from me with the link. Okay, there are a lot of questions being asked. I'll strongly suggest, I know, thank you Tilak, great session. It's a little over 8:05. Those who are asking me questions about the software, about the QMT, guys, drop me an email, call me, 9874847400. Drop me a call, drop me a WhatsApp. I'm going to take out each and every question of yours. You can email me at alpha.paul@gmail.com. I'm going to answer each and every questions of yours. There are a few people who are already registered for QMT, as I know, so it will be great if you join in, and we will extend this learnings ahead. Right? It was a pleasure. It was a pure pleasure. Thank you, Ankit. Awesome. See you on QMT class number 1. Don't be late. Okay? All right. Perfect, guys. So, thanks a lot. And yes, Amit is asking, is Alphabets is my product? Is something that we have researched upon. It's an intraday trading product. Yes. You can find it on my website. All right, guys. Thanks a lot for joining in. Any doubts, feel free to call me or drop me an email. Happy to help, and please trade well and trade wise. All right. Bye. Take care.